Good evening. My name is Chinemerem Joseph, and I welcome you to this edition of You and the Economy. The edition focuses on the 282nd meeting of the Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN. The meeting took place recently. Remember that in the couple of editions of the program which focused on the meetings of the MPC, we had told you that the body is the highest policymaking committee of the CBN. You also heard that the MPC was set up to facilitate the realization of the mandates of the Apex Bank, particularly those bordering on price stability, which encompass the management of interest rates, inflation, and exchange rates. The MPC also initiates and implements measures to enhance the realization of the economic policies of the federal government. The committee, which is headed by the Governor of the Central Bank of Nigeria, meets bi-monthly, and it held its last meeting for the year 2021 from Monday the 22nd through Tuesday the 23rd of November. As it is the norm, the MPC deliberated on key issues pertaining to how the CBN has been discharging its mandate. As it was expected, the MPC took decisions on all four key economic parameters that it deliberates upon at each of its meetings, all of which affect every Nigerian. Now, these are the monetary policy rate, the MPR, better known as the interest rate, the cash reserve ratio, the CRR, liquidity ratio, LR, and the asymmetric corridor. Being the last of its meetings to be held in the year 2021, the 282nd MPC meeting also served as a platform to review the performance of the CBN in the discharge of its core mandates during the expiring year. In line with tradition, the 282nd MPC meeting ended with a press conference at which the CBN Governor, Godwin Emefiele, briefed the media on the outcome of the meeting and other major decisions taken by the committee. You and the Economy was at the post-MPC meeting press conference, and here now is our report on the event. It is the 6th Monetary Policy Committee meeting in 2021 and also the last for the year. Members of the committee had spent over 24 hours deliberating on key economic issues. From external developments to domestic economic updates and the committee's outlook for the nation's economy. Year on year, the country's gross domestic product grew by 4.03% in the third quarter of 2021. This growth trajectory has been sustained in the past 4 quarters. The inflation rate has also continued to drop. The CBN Governor, Godwin Emefiele, speaks on what is responsible for this growth.
The continued support by the monetary and fiscal authorities is sustaining the growth recovery in Nigeria, notwithstanding the persistence of security challenges and legacy infrastructural constraints. Forecasts for key macroeconomic variables for Nigerian economy indicate continuing rebound in growth recovery for the rest of the year. This is expected on the back of continued support by both the monetary and fiscal policy to sustain high crude oil prices and, most importantly, availability of COVID-19 vaccines, as well as high turnover for vaccination in Nigeria.
For developments in the financial markets, The amount of non-performing loans in the banking system have continued to reduce. The equities market is also doing well, and the country's foreign reserve is at $41.4 billion. The committee projects continuous economic recovery for the economy as it estimates a 3.1% growth rate before the year ends.
The Nigerian economy is forecast to grow in 2021 by 3.1% CBN estimate, 3% by federal government estimate, and 2.6% by the IMF estimate. Inflation is expected to continue its downward trajectory as the harvest season sets in and the government works on improving the security situation to ease the bottlenecks constraining food supply.
The governor also highlighted some areas the committee wants the government to pay more attention to in order to sustain growth.
Members reiterated the need to remain cautious and urged both the monetary and fiscal authorities to sustain their support for the recovery as the pandemic was yet to be over. Committee, however, noted that with the sustained intervention by the CBN, economic activities will normalize in the short to medium term, leading to improved output growth and lowering of inflationary pressure. The MPC also urged the fiscal authorities to sustain the current efforts to revamp the economy through continued support to the critical sectors of our economy. The continued security challenges across the country remained a major source of concern for members, noting its impact on business confidence, foreign investor inflows, and overall economic activities. The persistence of insecurity in major food producing areas remained a key downside risk to our recovery. Committee called on security agencies in the country to increase their presence in order to boost public confidence and facilitate the movement of people, goods, and services across the country. With improved security, especially in these food-producing areas, members expressed optimism that food inflation will drop significantly following successful harvest and distribution. Committee also commended the gradual diversification of the economy with the increased contribution of the non-oil sector to government revenues and called for more support to increase non-oil exports as a source of foreign exchange into the economy. Members reiterated the impact of poor infrastructure on rising domestic price levels, urging the federal government to prioritize investment in public utilities to improve the business environment. These include transportation network, power supply, education, and health. Following the President's recent international call to investors to channel investments to Nigeria, members were of the view that funding of such projects could be sourced through equitable partnerships with foreign investors and Nigerians in diaspora.
It was also an opportunity for the Apex Bank to give an update on its various intervention programs and how they are faring.
Committee reviewed the performance of the bank's various interventions aimed at sustaining recovery of output growth and addressing the downside risk to other external and domestic shocks to the economy. Interventions continued largely in the manufacturing as well as industries, agriculture, energy and infrastructure, healthcare, and micro, small, and medium enterprises. Under the targeted credit facility, the bank has disbursed a total of 363.49 billion naira to 766,719 beneficiaries, comprising 638,070 households, 128,649 small businesses. Under its Agribusiness Small and Medium Enterprise Investment Scheme, AXMIS, the bank has released 134.63 billion to 37,571 entrepreneurs. Between September and October 2021, under the Anchor Borrowers Program, the bank disbursed 43.19 billion to support the cultivation of over 250,000 hectares of maize, sorghum, soya beans and rice during the 2021 dry season, and 5.88 billion to finance 6 large-scale agricultural projects under the Commercial Agricultural Credit Scheme (CACS). Cumulatively, the bank has disbursed a total of 864 billion to 4.1 million farmers, cultivating 5.01 million hectares of land. The bank also disbursed a sum of 41.2 billion for the commencement of the Brown Revolution, a large-scale wheat program to wean Nigeria off imports by 35% during the first year alone. In addition, the bank disbursed a sum of 261.92 billion for 42 additional projects under the 1 trillion naira manufacturing intervention. Cumulatively, the bank has disbursed a sum of 1.08 trillion under this scheme. As part of its effort to support the resilience of the health sector, the bank disbursed 5.39 billion to 9 healthcare projects under the healthcare sector's intervention facility just within September and October 2021. The bank has also cumulatively disbursed the sum of 108.65 billion to hospitals and pharmaceutical industry. 54 of the 117 projects funded are for hospital services. Committee was gratified that the funding under the health sector has resulted in the establishment of 2 new cancer centers in Nigeria, over 59 MRI and more than 42 CT scan centers all over the country within a space of 18 months. To further promote entrepreneurship development among Nigerian youths, the bank recently approved the implementation of the Tertiary Institutions Entrepreneurship Scheme. The scheme is designed to create a paradigm shift among undergraduates and graduates of tertiary institutions in Nigeria from white-collar jobs towards entrepreneurship development. The guidelines for the implementation of the scheme was recently published, as Bank of Industry is presently partnering the bank for the pilot implementation phase.
After deliberations on these issues, should the 4 key policy parameters be tightened, loosened, or retained? Here's the committee's verdict.
Given the level of its conviction about the efficacy of its actions on macroeconomic variables, MPC felt that whereas tightening would further help to rein in inflation aggressively, it nevertheless feels that tightening will increase the cost of funds and constrain output growth. On the other hand, whereas loosening will lower policy rates, ease liquidity pressures, and stimulate additional credit creation, which will boost output growth, MPC also thinks that loosening will further widen the negative real interest rate gap and compound the price distortions in the money market, which could fuel inflationary pressures. As whether to hold its existing stance, MPC believes that the existing monetary policy stance has supported the growth recovery and should be allowed to continue for a little longer for consolidation to achieve the MPC's mandate of price stability that is conducive to growth. The committee also feels that a hold stance will enable it carefully appraise implications of unfolding global development around policy tapering and normalization by the advanced economies. Based on the foregoing, committee decided on a whole to hold all policy parameters constant to support the enabling environment for sustained recovery of the Nigerian economy. Committee therefore decided by unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted to 1. Retain the MPR at 11.5%, retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR. 3. Retain the CRR at 27.5% and retain liquidity ratio at 30%.
The CBN governor's address was succeeded by a question and answer session, during which he fielded questions from the media on a number of very important issues.
The CBN has granted forbearance to banks and their customers over time. This is about to come to an end in March 2022. Now, if the CBN decides to now do away with the forbearance, how are you so sure that this decision will not lead to an increase in non-performing loans? Thank you.
At this time, we believe that the global economy has opened up. The lockdowns have been lifted, and of course, we know the casualties, the economic damages and fatalities that was caused as a result of the lockdown. And I'm so sure that not too many countries, if at all, will, in the midst of this pandemic, want to embark on a wholesome lockdown any longer. Particularly because most countries are all administering vaccination that they think should assist in reducing the impact of the strain of the virus. So we believe in Nigeria, businesses are back, companies are back to business, revenues have improved, and if revenues have improved, then companies or businesses that took loans, if we say the loans for intervention has moved from 5 to 9, if we say that the moratorium of 2 years expires in March 2022, and of course the restructure that you have graciously benefited remains, then naturally we should expect that companies should be able to pay back their loans. So as a result, we do not see any likelihood of increase in NPLs. Indeed, we have worked so hard to bring the NPL down from as high as almost about 9-10% about 2 years ago to the level that it is today, which is 5.3%. And we are gratified that we are aggressively working NPLs down to the maximum threshold that has been set by the central bank. So I don't think there's any need for anyone to worry at all.
How is the Inera's performance and adoption rate among Nigerians?
It's still too early for us to begin to carry out an assessment because it's just, I think this is the 4th week now. But I think it is gratifying to see that so far, I think we've seen almost about 560,000 downloads on the Inera platform, out of which 490,000 are consumers and 83,000 are merchants. So we're optimistic that things are going. But let's not forget, like we said, the Inera or digital currency product has extremely wide possibilities. There's so many things that can be done. But what we've done initially is to constrain it, begin the journey gradually. We are taking baby steps. So even in the midst of we taking baby steps to see how actors within that globe are behaving to ensure that we're able to control some of the risks that we see, I think that it is a good result so far. As we see the performance of players and stakeholders within that Inera market, what we do, we open it up more and more, and we think that it is a game changer for the world and also for Nigeria. So too early to begin to talk about it, but at least by way of update, we are moving closer to about 1 million downloads on that platform.
The next question is also from Collins Wednesday of the National Newspaper. They said, recently, there have been cases of deductions of money from the accounts of customers by some deposit money banks without specifying what those deductions or charges are meant for. What is the CBN doing to restrain the banks from such actions?
The Central Bank of Nigeria insists that consumers of bank services, in this case customers, must seek, and indeed if it is not on CBN website, I'm going to ask that we place it on our website, the guide to bank charges. Go and read your guide to bank charges. You should not allow any bank to just pass on any discretionary charges on your account. that is not contained in the guide to bank charges. If you find any that is not, raise an alarm. We have our Consumer Protection Department. We have always advertised our own hotlines and emails where you can always reach us. And indeed, we have seen cases in the past where people have raised an alarm, and it has resulted in hundreds, if not even billions of naira reversal back to customers' account. So I can only say, if you are being charged by any bank for transactions that did not happen, or charges that are not inside or stated in the guide to bank charges, you have to ask the bank to reverse it because it is not meant to be there.
Babajide Komolafe of Vanguard newspaper. There has been a raging controversy about who is the highest individual shareholder in First Bank PLC. As the apex bank regulator, what is the position of the CBN on this?
First Bank is so big that not one person can say he owns First Bank. They are just one, and they should see themselves as representing others in running the bank. Okay? I have read Securities and Exchange Commission clarify the issue of shareholding percentages of different, and indeed they are the people that are supposed to do so. Our examiners themselves are also continuing to look at it, and we will, I think we should take SEC's position because SEC is the regulator of the capital market. We will take their position and they will give guidance on this subject. But of course, as it affects the running and operation of the bank, we will take preeminence in ensuring that the right things are done. But of course, our examiners are looking, of course, naturally, returns are sent to Central Bank of Nigeria about people, individual shareholders. And of course, if our position is not in tandem with the position of SEC, we will talk to SEC about it and we will also advise the public. But so far, I would say that we should take the position of SEC as the regulator of the capital market, because regulating share price ownership is sole responsibility of SEC, and we would not want to override SEC, the regulator, on these issues. But we'll continue to work with them, and we'll have very, very good relationship with them.
Latest figures from the National Bureau of Statistics indicate that Nigeria's GDP grew by 4.03% year on year in real terms in the third quarter of this year, which you highlighted. Without preempting your outlook for the next year, which we expect later this week, when you attend the annual dinner of the Chartered Institute of Bankers of Nigeria, are you optimistic that these figures will continue in this positive trajectory?
What is important is that we're very upbeat about the progress that we've achieved so far in the economy, and what we can see if we keep doing the right things is that yes, we are still far from double-digit growth, but I believe Nigeria will move aggressively, keep doing the right thing, stop doing the wrong things, focus aggressively on them tenaciously. I think the growth levels will move aggressively upwards. We are expecting that growth for 2021 certainly will be above 3. We are so certain to be above 3. So if we take it on from there, of course 2022 we'll expect that it will move towards 4, if not better, if we keep doing the right things. Because whether we like it or not, as economists, there must be certain risk variables. All things being equal, because if something happens and that makes it difficult for you, you will tell the whole world, this is where we planned we should be, but ABC happened, and so we couldn't achieve it. Unfortunately, this is what we achieved. But we don't pray that those negative certain risk variables happen, so that we can continue on the right course and the rest of them. This is the last Monetary Policy Committee. I wish you all a very Merry Christmas, Happy New Year, and I think enjoy 2021, and let's meet in 2022 again. Good afternoon.
You're welcome back. As you have seen on today's edition of the program, the last of the MPC meetings for the year 2021 was, without doubt, insightful and defining. It served as a robust channel to intimate Nigerians with the impressive strides of the CBN in the discharge of its core mandates in the year. And from what you heard, You will agree with us on You and the Economy that the Apex Bank has done remarkably well in performing its roles all through this year. Now, for details on some of the Apex Bank's policies and intervention programs, please visit the bank's website. It's www.cbn.gov.ng or call the contact center on 0700-225-5226. It is on that note that we draw the curtain on today's edition of the program. Do join us again, same time next week for another interesting edition of You and the Economy. Bye-bye.